studying your last two. I swim med tea when they turned in. The staring down to mute. And can learn the pole that sunk he died.
Every T2 corporate tax return begins long before tax software is open. The first and most important step is gathering the right information from the client. During the initial meeting, the tax preparer works to understand the client's business, its operations, goals, and tax planning needs. This early discussion helps identify important decisions that will affect the corporation's taxes throughout the year. The workflow then follows a logical sequence. It starts with the client planning meeting, where the business and its tax objectives are discussed. Next comes compensation planning, where decisions are made about whether the owner should receive a salary, dividends, or a combination of both. After that, the focus shifts to bookkeeping and record collection, including bank statements, credit card statements, payroll records, accounting software data, and other financial documents. Using these records, accurate financial statements are prepared. These statements become the foundation for preparing the T2 corporate tax return. Once the financial information is finalized, the tax preparer completes the T2 return, prepares the required schedules, and calculates the corporation's taxable income and taxes payable. Before the return is filed, accountants often perform year-end tax planning. They review strategies such as bonus accruals, expense timing, income deferral, and dividend planning to legally reduce the corporation's tax liability and improve the client's overall tax position. Finally, the completed return is reviewed by the client, approved, electronically signed, and submitted to the Canada Revenue Agency through a file. The most important takeaway is that corporate tax preparation is not just about filling out forms during tax season. It is an ongoing advisory process that continues throughout the year, combining planning, bookkeeping, financial reporting, tax strategy, and compliance. Mastering this complete workflow is the first step toward becoming a skilled corporate tax professional. Understanding the client is much more than collecting numbers. Before any tax calculations begin, a tax preparer must first learn how the business operates, what its goals are, and what tax planning opportunities may exist. This discovery stage involves discussing the corporation's business activities, industry, fiscal year, ownership structure, growth plans, future investments, tax concerns, and reviewing the previous year's tax return. The better you understand the business, the better you can prepare an accurate and tax-efficient return. One of the most important planning decisions involves owner compensation. Owner managers are generally paid through salary, dividends, or a combination of both. Paying a salary creates payroll obligations, including CPP, employment insurance where applicable, and income tax withholdings, but the salary is deductible to the corporation. Dividends, on the other hand, are paid from after-tax corporate profits and do not require payroll deductions. Choosing the right balance between salary and dividends depends on the corporation's financial situation, the owner's personal tax position, and long-term tax planning objectives. After the planning discussions are complete, the next step is collecting all the financial information needed to prepare the tax return. This includes bank statements, credit card statements, revenue reports, expense records, payroll records, accounting software files, and any other supporting documentation. These records provide the foundation for preparing accurate financial statements and ensuring that every transaction is properly reflected in the corporation's books. Getting this stage right has significant benefits. It allows the tax preparer to identify valuable tax planning opportunities, produce reliable financial statements, legally minimize taxes, and complete every required schedule and form accurately. In many ways, the quality of the entire T2 corporate tax return depends on how thoroughly this planning and information collection process is completed. A well-organized client and complete records make the entire tax preparation process faster, more accurate, and far more effective. Once all the necessary information has been collected from the client, the next step is to convert that information into meaningful financial reports. The accountant prepares the corporation's financial statements, beginning with the income statement, which summarizes the company's revenue, expenses, and net profit or loss. Next is the balance sheet, which presents the corporation's assets, liabilities, and shareholders' equity. Finally, the statement of retained earnings shows the profits retained within the corporation after accounting for dividends paid to shareholders. These financial statements form the foundation of the entire T2 corporate tax return. With the financial statements completed, the accountant begins preparing the T2 return using professional tax software, corporate identification details, financial statement figures, tax adjustments, deductions, credits, and the required schedules are entered into the software. During this process, accounting profit is adjusted according to the Income Tax Act to determine the corporation's taxable income, which is then used to calculate the taxes payable. However, preparing the return is not simply a data entry exercise. Before the return is finalized, accountants perform year-end tax planning to help reduce the corporation's tax liability legally. They evaluate strategies such as accruing bonuses, timing deductible expenses, deferring income to a future year, and planning shareholder dividends. These decisions can significantly affect both the corporation's taxes and the owner's personal tax situation. Once the tax planning is complete, the return moves to its final stage. The client reviews the completed T2 return, confirms that the information is accurate, and authorizes the filing. The return is then electronically submitted to the Canada Revenue Agency through a file. A confirmation receipt is received, and any outstanding tax balance is paid by the applicable due date. Throughout this entire process, the role of a professional tax preparer extends far beyond preparing forms. A skilled tax professional understands the client's business, organizes financial information, identifies tax-saving opportunities, and ensures that the corporation remains fully compliant with CRA requirements. Preparing a T2 corporate tax return is a structured process that combines accounting, tax planning, and regulatory compliance to deliver accurate financial reporting and effective tax management.